Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So I have been getting requests from brothers who are on the Discord, brothers who are on the Patreon account to check out Adobe. Adobe is one of the companies that I own in the family portfolio. They've reported last week they were down 12% on that day. They're down about 22% since the beginning of the year. The S&P 500 is up 27%, but the Adobe is down about 22%. So what I'm going to do now is I'm going to go through the reasons why the stock was down on that day, look at the recent reports that they've came up with, see if there's any issues there. Then we're going to look at the financials for this business, and then we will talk about valuation, and then at the end I'm going to tell you exactly what I will be doing moving forward with this company, inshallah. If you haven't pressed that like button already, please do so. It really genuinely helps the channel. And of course, if you can join us in the Patreon account where you get access to the Discord, plus loads of other things, inshallah, that will be absolutely amazing. Now, I do own Adobe, like I said, but the company has not done anything basically since the beginning of the year. So the 1 year is flat, basically down about 23%, almost 23% year to date. As you can see, Wall Street is saying it's a buy, Seeking Alpha Analysis is saying it's a buy, Quant is actually saying it's a hold. So what we're going to now do is basically look at the financials, because this is important. For me, this is basically what it comes down to. If the company is doing well, you will know it by looking at their total revenue. Okay, so total revenue starting 2015 up until now is this $4.7 billion in 2015, and then it's growing every single year. 5.8, 7.3, $9 billion, $11 billion, 11.8, 15.7, 17.6, 19.4, $21.5 billion, and that's where we are right now. So as you can see here, this is absolutely massive growth, and this is the reason why I like software companies. Okay, check this out. Cost of revenue, they made $4 billion, or closer to $5 billion, but they're not even spending $1 billion basically to produce that much. And this is why these companies, because there's not so much overheads, they don't have a huge machineries and things. Like if you look at, let's compare this with ASML, for example. I want to see the difference between the two companies, okay, in terms of this much. Now, they made $7 billion, but they spent $4 billion to basically do that. Now, last year, basically is $30 billion, and basically they spent almost $15 billion. So half of the revenue is basically gone back straight to basically used to make that revenue, if you like. So all the cost is associated making that. Is basically, this is what it is. So it's that's why I love software companies, because they are different. So we're still looking at Adobe now. Gross profit of $19 billion basically in 2024. That's where we are right now. And then if you look at, they made some expenses, they've actually paid some taxes and all of those things, and then basically the net income is $5.5 billion, and I think that's closer to their free cash flow, which we'll be looking at in a second. The basic EPS or earnings per share is 1.26 in 2015 to right now $12, which is absolutely amazing if you think about it. Now looking in terms of current liabilities against current assets and total assets, total liabilities, because it is very important to check that out. Total current asset, we've got $11.2 billion. So that's stuff they can liquidate in the next 12 months if they need to. And then total assets of $30 billion. Now let's see, their total current liabilities is basically $10.5 billion. And remember, they had total current assets of $11 billion. So that's completely covered. 30 billion in assets, 30 billion, 16 billion in basic liabilities. So that's completely covered, which is absolutely amazing to see. So now we've seen that. So it's a solid business. They're making good profit. Okay, whatever. Let's have a look at basically the latest and the filings that the company has made. So digital media and digital experience are the two segments here. We've got 3.8 quarter-over-quarter, okay, increase, and we've got 3 billion, basically 3% up quarter-over-quarter for the digital experience, and a 10% and 11% basically when it comes to year-over-year, which is really good. Okay, and as you can see, that revenue segment is heading the right direction. Now, Creative Cloud was at 3.6 and year over year about over 10%, and same almost a 4.5% when it comes to quarter over quarter, and year over year we're looking at almost 17%. So everything is going in the right direction. Okay, so the fourth segment is business reports. All of them are heading in the right direction. And when you look at the basically the different geography, different areas, is all heading the right direction. There's literally nothing to worry about. Then you check out one of the things that I've seen is there's quite a few reports on Seeking Alpha that you can look at. But one of the major things that the company has fallen for the basically that day, whatever, 12%, whatever on that day is this. Okay. So looking to the next fiscal year, Adobe expects adjusted earnings to fall within the range of $20.20 to $20.50, okay, per share, with the midpoint of $20.35 below the consensus, basically what the estimates were, which is $20.52. So that's the first part. So what they're saying is this is what the analyst was expecting to basically for the company to come out and say, and the company said no, this is basically our range, okay, that's our range, and then the midpoint is around here. Then they said basically the company anticipates revenue shortfall next year of around 200 million due to foreign exchange headwinds, which is fine, that happens a lot. Okay, and then the next part is the revenue. The revenue for the full year is expected to be between $23.3 billion and $23.55 billion, below the consensus of $23.8 billion. Check this out. So they expected the high end to be $23.55 billion, but the company expects that. The analyst, they expected basically $23.8 billion. So just because of that, they think the company is actually no longer worth investing and everyone is going to sell their shares. Because how else can you explain? It really makes no difference to me. It makes no sense to me to the fact that a lot of people sold out this stock as soon as that happened. As soon as they found out, basically, we're no longer expecting $23.8 billion or whatever it was here when it came to the revenue side of things, or $20.52. We're now expecting about, let's say, I don't know, 2050 rather than 2052. This is why I hate Wall Street. This is why I don't like basically looking at the earnings report. I like to look at it just to give myself the full picture, but I don't listen to Wall Street as much. And to be honest with you, my main concern for this company is the use of AI and what impact it will have on this company moving forward. And genuinely, that's my main concern, because there are a lot of the products that the company has can easily be replaced by some AI right now. They are doing their own part, which is this thing called the Firefly basic generative AI. Okay, so they do have it, but this whole AI situation started at the beginning of the year. You can't expect people to all of a sudden monetize it very quickly, as like ChatGPTs and other companies have done. This is basically they need to take their time to be able to monetize it. Yes, they do have that Firefly. It is basically using AI. It is getting better, because remember, AI is all about the fact that, especially generative AI, the more data we give it, the more basically the better it gets, and so on. So it will get there eventually, but right now that should not be the reason that we sell in this stock. Okay, the company, it's in the right place. It is definitely going to invest a lot of money into making sure that they get into this AI, generative AI situation, and they've already started. They've got products that's already out there. They're monetizing it, and basically, of course, they're making it use or whatever. Then that might take a couple of more quarters, a year, whatever. But I'm willing to wait. I'm not really investing in this type of businesses just for next month and month after. Okay, there are quite a few competitions out there, the Canvas and others, but they're also in a similar sort of situation. Don't forget that they also have to come up with the products that are as good as whatever. So OpenAI is coming up with their own kind of basically products that potentially might compete with this company. It's all hearsay. Let's figure out, let's wait. Right now the company is not falling apart, and financially it looks stable, so let's look at a few more things. Okay, it's a huge company, over 200 billion market cap right now. We've seen the EPS already. It has wide economic moat. Okay, again, that's very important. If you haven't seen my video, you basically a couple of days ago, watch that, because that's where I talked about a lot about this. Current P is about 35, the forward P is about 23, and the 5-year average is 37. So it looks cheaper looking at the forward PE, and the sector, the medium sector, sector medium, if you like, is 25 right now. The free cash flow is right now $6.5 billion, which is absolutely amazing. The 5-year, the compound annual growth rate for the rate, basically EPS for free cash flow is 12%. Free cash flow margin of 34%, which is absolutely huge. And check this out. Profit margin, return on equity, return on invested capital, operating margins, all of them are absolutely amazing. And guess what? Net income margin is up to 30% over the last 5 years. Total return the last 10 years is 20%. Revenue basically grew about 15% over the last 5 years, compounded annual growth rate. EPS about 19%. And we've already seen they have a current liability, current assets are higher than current liabilities, okay? And it covers that. They're expecting the earnings to grow about 10% next year. So that comes from seeking here. So if you're interested to find out, because I know some of you have been asking, where do you get this information from? So some basically in 2026 data there that I'm using basically for this part. Okay, so about 12%, 12.8%, and then that 10% comes from there for when it comes to revenue. So you've got double-digit growth for a company that potentially might be going through some sort of a transition. And according to Morningstar, it's actually discounted about 20% right now. $590 per share is where they think the price should be. According to Simply Wall Street, it's 10% overvalued, so they think it's $429 per share. I've not seen that many companies that are bullish on this company, but this is one of them. Okay, tip rank is actually saying $600 basically dollars per share, 28% upside from where we are. It's a moderate buy from them. Average price from Seeking Alpha to $591 per share. That's about 26% upside from where we are. It is also a buy rating from them. I'm going to put all of this into the model that we use, and I'll share that with you guys in a second. And as you can see from Sharia compliant, absolutely no issues. They are buying back their own shares. Okay, not a lot, but they are buying back their own shares, which is quite nice. They don't pay any dividends, so this is nice to see that. This is how much they're spending to buy back their own shares, and you can see $5.3 billion to 6.8, 7.3, and there has been a bit of a decline when it comes to free cash flow, basically last year. But then again, that's where we are right now. So nothing too huge to worry about, just tiny bit of a decline with regards to that. And I'm happy that they didn't actually buy Figma when they were actually going through, because that would have actually meant they will wipe they would have been a lot more debt than they are right now, to be fair. Right, now looking at the more basic model that we use. So we used a discounted cash flow model, which gave us $520 per share. Morningstar is $590. Simply Wall Street we've already seen. Seeking Alpha we've seen. Basically average all of the all of them for, and then we've got $520 per share. That's the average intrinsic value for this company. Current stock price for $461 per share, difference of 13%. And again, if you say, for example, this company might be a bit volatile and need that 10%, so you can buy the stock right now, $468 per share, and it still seems undervalued. And genuinely, that is a good buying basically space. Like right now, if it basically hits, I promise you, if it goes down more, I will be buying more of this company, because I'm not worried about what might happen next week or the month after. I'm thinking of maybe 5-10 years from now on. And I promise you, 10 years from now on, this company will be paying dividends. It will be a very mature company. It will have amazing products, all of these things. I'm not just saying that genuinely, but think about what the company does and how many other companies are in that space right now that are well established. That recurring revenue, the fact that I've shown you this, to me, this is important, okay? The fact that they are able to take home, gross profit of $19 billion from $21 billion. That's absolutely huge. And a lot of that is recurring revenue. We use Adobe products in our company, and guess what? We just renew it. We don't even think about it. They increase the price, you still renew it, because we used to using their products. And that switching cost we talked about yesterday, okay, that is basically very sticky and it's quite hard to move from the company. So I might be wrong, I could be wrong, but I would personally be buying more if it hits that price I was just basically looking at. So if it gets to 420s or 4 whatever, then I will be buying more of the company. Okay, I already own a bit, and inshallah I would basically dollar cost average into it, and that's my personal. But don't do it. Do your own research, find out more information about the company before you do anything. But yeah, so that is what I wanted to share with you guys today. So I don't own it in this portfolio, so I can't share it, but if you guys want to see how many shares I own of Adobe and so on, but then of course join us on the Discord, on the Patreon account, where you will get access to the family portfolio, inshallah. Anyway, I'm going to stop here. Have a wonderful day. Assalamu Alaikum.